Hello investors and traders, today we'll speak about 3 dividend stock with a dividend yield more than 4%. And let's start with the first company for today. It's Philip Morris. It's a tobacco company. The biggest advantage of this company brings to the table its geographic diversity. The company's products, which includes the premium Marlboro brand outside the US, are for sale in more than 180 countries. If tobacco regulations tighten in one developed market, there is likely an emerging market offsetting this weakness. To add to this point, tobacco products contain nicotine and indicative chemical. The indicative nature of tobacco products allows Philip Morris to pass along price increases that outpace whatever volume declines it might be dealing with. And also Philip Morris is investing in its future. The ongoing rollout of its IQOS heated tobacco system provides a new fast-growing revenue source that can be offset declines in traditional shipments. Let's have a look on its fundamental parameters. We can see that debt to EBITDA ratio is 2, interest coverage 18, so it's quite high, and also Altman is about 4, so the probability of default for this company is not so high, so I'm not see any problem with that. And let's check the marginality of this company. You can see that gross margin is 65 and the net margin 27. Quite impressive because it's in the same level as Google, Apple, Microsoft. Very high marginality for this company. The growth rate last year is not so high, but it's still a growing company. And for the near future, we can see that EPS and the revenue are expected to grow at in 5% at average. The evaluation now P ratio is 16, forward is 15, so it's in the market. The average PE of S&P 500 now, and the PS ratio is 4.6. So for such marginality, I think it's okay. And let's pay attention to the dividend. Dividend yield now is 5.3%. The dividend last 3-year dividend growth rate is 3%. So for me, of course, it's a nice dividend stock. Let's have a look on the chart. In my mind, yeah, it's a weekly chart. So as I see, it was impulse here. It was the first wave, the second, the third, the fourth, and the fifth. It's I think it's correct because the third is usually the largest wave in the impulse. Now here most probably we have ABC move, a correction, ABC, and now and after this correction pattern, it could be another impulse. So in this case, as I see, at least there is a potential at about 10% in the nearest future. So I'm personally got this stock in my portfolio. The dividend yield is more than 5%. Market cap is 146, so it's a big company. So for me, it's like as a dividend investor, I'm continue to invest in this stock. And let's move to the second stock for today. It's Ford. I know. I think most of you know this company. It's a vehicle producer, very old company. So let's pay attention to its parameters. So here we see the dividend yield is more than 4%. Market cap about 60 billions. And the PE ratio, PA, is now only 6, so it's very cheap in my mind. Also, we can see that last quarter is the revenue begin to grow, and the marginality also increasing. Last quarter, it's the company showed the losses, but I think maybe next one it will be it's supposed to be net income. Also, the payout ratio only 20%, so it's very low. So only 20% from its net income company pays as a dividend. So there is as I see, a nice potential to even increase its dividends. If you check the projections on the annual basis, we can see that the EPS, yeah, it's the EPS supposed to be the same level in the future. future years, and the revenue, by the way, also 42 for 41, yeah. The analyst expecting that it would be very stable company. By the way, last month the Ford showed a nice rally. It was 26% up from this level. So for me, I'm considering this stock. The dividend yield very attractive for me, and by the way, it's very cheap, because let's have a look on the PS ratio. Yeah, we can see that, yeah, below 1. So generally, yeah, it's very its evaluation parameters very cheap. Let's have a look on the chart. So here, last years we have a range between 11 and 16. Most probably, I think there's a high probability that we will get to this higher border of this range. So in this case, there is a potential of 12-13%. Why not? And then of course we will see. But anyway, you have a potential, you have a nice dividend, and generally the stock itself, it's not so expensive, the valuation. And by the way, please pay attention to the RSI, the momentum indicator, the weekly time frame, it's only 53. So all these details together are telling us that at least there is this company may continue to grow. And the last stock for today, it's IT company IBM. So let's have a look on it. So dividend yield is more than 4%, market cap above 100. Here we can see that the marginality last years is above 10% net margin, but the revenue is begin to decrease. Not a good side, but I think it's not so, it's minor. And the dividend yield last years is very stable. It's about 4%, 5, even above 5. So also very nice dividend history. And the projections, yeah, this year it's the EPS supposed to show a surge, but then it will be very stable. 1.6, 2.2, and 2.1. So the EPS, let's move to the annual basis. Yeah, it will be stable. And the revenue check, let's check the annual basis. Yeah, by the way, it's also supposed to be, if reported, 50, 57, 60, 60, and 63. So it will grow, but not in not so high temp. So let's have a look on IBM chart. The white one, the white level is the major support level since 99. So if we'll see another possibility, another time that the stock will trade it near this level, I think it's the best point to buy. But now we are in the range between 128 and 156. So we in the middle of this range. So I think that there is still a potential for growth, because the Nasdaq is down about 30% for this year. If the inflation in US will continue to come down, will continue to decrease. So I think that all the IT sector, all the Nasdaq companies will have a very nice performance in the next year. So instead of it, you will receive a nice dividends more than 4 or 5%. So I think it's also very nice and pretty. So it was 3 stocks that I'm continue to hold. I think the most interesting is Philip Morris for today. So if you like this video, press the like button, subscribe, join to my channel, and see you on the next time. Bye.